About 50% of the tax benefits you get if you're a business owner or an investor come from the type of entity you use. So whether it's an LLC, and different entities are used for different purposes. I mean, we use a different entity for real estate than we use for a business. Some people want to be a corporation, some people want to be an LLC, some people want to be a limited partnership, but these all work together. This is why I think the major qualification is education, right?
Hello, 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 Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about taxes. It's that time of year again.
Taxes.
We're getting to taxes. Any comments, Kim?
Taxes are something they don't want to talk about. They just ignore it and say, hopefully it'll go away. Well, it's not going away. And I was talking to somebody just the other day, and he's a business owner. And I said, well, your taxes are going to go up. He goes, I'm okay paying more taxes for my business. And I'm like, well, you're crazy then. It's really, really important, I think, that we understand what the heck is coming down the pipeline.
So I want to repeat the words of probably one of our greatest leaders of all times. It was during the 2016 presidential election campaign. And it was Hillary versus the Donald. And Hillary accuses the Donald of not paying taxes. And I didn't remember these immortal words. They will go down in history. They should be on his tombstone. And he said, that's because I'm smart. And that's the truth.
There's taxes that can benefit you and taxes that are going to decimate you. You got to know the difference. It's like an asset versus a liability. If you start calling assets or liabilities assets, you're in trouble.
So this is the Rich Dad Radio program. It's all about our favorite subject. It's called taxes, and how I do my very, very, very best, and Kim does her very, very best to not pay them.
Legally.
Legally. Because I remember one of the first paychecks I got, I said, geez, what happened to my money? And it went back.
Who's FICA? Who's FICA?
and the Americans, it seemed, forgot there was an event that happened in 1773 called the Boston Tea Party. And it was a tax revolt against Mother England. And ever since then, America has been pretty much tax-free up until 1943, when they couldn't pay for World War II. It was the Current Tax Payment Act. So my point here is, I guess I want to repeat the words of our immortal great leader. I know some of you hate him with all your heart, Donald Trump. The reason he doesn't pay taxes is because I'm smart. That means I'm smart. So with that, I want to invite Tom Wheelwright. He is our tax advisor, the author of Tax-Free Wealth. And he is, in my experience, a god. I mean, this guy has made me more money simply because I haven't had to pay taxes. Or Kim and I haven't had to pay taxes. And then we have Garrett Sutton. And he's essential because he's our corporations attorney, or as it's called entities. And the reason you have to have an accountant and an attorney is because that's what people do who are smart. Okay, with that said, so we have Garrett Sutton and Tom. They'll be talking about taxes, why you need your own corporation, an LLC or an S, whatever, because I don't know anything about that. Garrett does. That's a special.
And Garrett has a couple of books called Own Your Own Corporation and Start Your Own Corporation.
Yeah. So let's get on to the most popular subject of raising taxes. Tom, any comments? I mean, give us a quick background of your background when it comes to taxes and what qualifies you. The word from now on is qualifies. What qualifies you to speak about taxes?
Well, I started with a bachelor's in accounting from the University of Utah. Then I went and got a master's of professional accounting with an emphasis in tax from the University of Texas in Austin. I spent 7 years with one of the largest CPA firms in the world, Ernst & Young, including 3 years in their national office back when Reagan had his big tax bill. I spent 25 years buying, building and selling CPA firms, spent 14 years as an adjunct professor in the Masters of Tax program at Arizona State University. And as Robert and Kim, the last 10, 12 years, spending a lot of time traveling around the world talking about taxes. So
All over the
this
world.
is my study, is taxes. And
Okay, Mr. Sutton, give us your background. I mean, you went to the same school with Kamala, but
Well, I went to two schools that you really like, Robert. I went to the University of California at Berkeley,
that's
right?
even worse.
Then I went across the bay to Hastings Law School in San Francisco, and Kamala was there a couple of years after I was. And I moved up to Nevada. Nevada's a great place to set up a corporation like Wyoming. So it's time to think about not only having your entity, your corporation and LLC in place, but maintaining it. You've got to maintain it over a period of time to stay protected.
I was going to say, Garrett, you forgot the best part of Nevada, and that's Nevada doesn't have income tax. That's the
There you
best part
go.
of
You
Nevada.
left California and went to Nevada. And another point I want to make is we have Garrett and we have Tom on the show because Tom and Garrett are always talking to each other. They're talking to each other about our tax situation, our entity situation, but they talk together, and most attorneys and accountants don't talk. And that's part of the problem.
Yeah. And Garrett and Tom and I have traveled all over the world talking about taxes and corporations. But unfortunately, the average person cannot do anything about it because they went to effing school. They got a job or they became a doctor or a lawyer. So this here is my new flip chart since we're now on Zoom time. But this is the cash flow quadrant, book number 2, E, S, B, and I. E stands for employee. S stands for small business or specialist like a doctor, lawyer, or accountant. B stands for big business, 500 employees or more, or a brand, which does a brand. And I stands for inside investor. There's a very big difference. These guys invest from the outside, but they invest from the inside. And the tax rates, and Tom will verify this, are basically the same all over the world. In Russia and America, I don't know about Havana, but anyway, there's 40% for employees, approximately 60% for small business or specialists like doctors or lawyers or small entrepreneurs. And this is 20% for the big guys. That's why Trump can say, because I'm smart. And I stands for 0, which is why Trump says I'm smart. I want to be very clear on this. You have to qualify to get here. Just like if I wanted to play in the Masters golf tournament, I'd have to qualify. Tiger Woods has to qualify every year. It used to be he had to go to a bank to qualify for a loan. Today, they just give it to you. So these are the 4 things. I'll be very clear on this because just don't think you can go out and do this. We do not recommend it because you'll go out through jail in handcuffs, not paying taxes.
But to your point too, is the ES side, that's your poor dad. That's where your poor dad was. And the BI side is where where rich dad is. And so part of our whole philosophy of the Rich Dad Company is to move from the E and the S side, the left side of the quadrant, to the right side of the quadrant.
But you have to do something, and 99% of the people go, "Oh yeah, I know that."
Yeah, but they
don't do anything. As Buckminster Fuller, guys invented that Joseph Jones says, everybody knows a lot, they just don't do anything. They sit there and get their pockets picked. So there's 2 things. Reason Garrett and Tom, accountant and attorney, are important to this. Garrett's specialty is corporate law. And you got to protect yourself, 1, from taxes, and number 2, from lawsuits. If you have money, they see lawsuit. All over Phoenix, I don't know about the rest of the country, but I see this big signs, in a wreck, we'll give you a check. Lerner and Rue, the place to go. And they're just saying, if you've been injured, are you a victim?
Are you a victim? Are you a victim? It's a victim society.
So not only do you have to worry about the government, you have to worry about your next door neighbor who's going to sue you when they trip over your sidewalk. So with that said, that's why you must have, if you're going to play on the B and the I side, you need both an accountant and an attorney. That's the difference. So with that said, Garrett, give us a few minutes on why you think litigation is going to go up, lawsuits.
Well, Robert, litigation has always gone up. If you have real estate in your own name, it's time right now to consider putting it into an LLC. If you operate a business as a sole proprietor, as Robert says, people are looking for enterprises to sue. And if you do that work in your individual name, they can reach everything you own. So it's time right now to get with an attorney and talk about setting up an LLC or a corporation for your protection, because litigation is on the rise.
That's a good point, because most people, they have everything in their name. They're proud to have everything in their name. My house is in my name. My cars are in my name. My business is in my name. And as you said, you get sued for anything and they can come after everything.
On top of that, Kim, the reason that the S quadrant has such a high tax rate is because those people don't use entities the way Garrett's talking about. So this is why, like you're talking about, Kim, Garrett and I talk because the entities for the legal side have an impact on the tax side. And so if you're in the S quadrant and you don't have an entity, you're going to pay the highest tax possible. If you do, you can have the same tax rate as the big business. You have to qualify by getting the education and the advisors.
Yeah, on this side.
Yep.
So you can still be this, but act like this legal
right.
and tax-wise.
And
That's
not
right.
only do you have to be qualified, you said, Tom, your advisors need to be qualified, because for Robert and I, when we started out, we didn't have an accountant, we didn't have an attorney. And then as we got more and more sophisticated, we needed higher levels of accountants and attorneys.
So Tom, when you talk to people about minimizing taxes legally, how does a corporation, or what Garrett says, come into play with the government?
You know, about 50% of the tax benefits you get if you're a business owner or an investor come from the type of entity you use. So whether it's an LLC, and different entities are used for different purposes. I mean, we use a different entity for real estate than we use for a business. You know, some people want to be a corporation, some people want to be an LLC, some people want to be a limited partnership, but these all work together. This is why I think the major qualification is education, right? Because if you don't understand how these work together, Garrett and I have seen advisors talk about getting better advisors, Kim. Garrett and I know you remember this, Garrett. We remember advisors coming and suggesting these entities for people, and we're going, this looks like malpractice to us. I mean, this is just, this is going to raise your taxes and not going to give you the asset protection. And so you really have to have the advisors working together, and you need to know what you're doing as well.
Yeah, and the name of the game is, are they qualified? Let me say it again. Tiger Woods is the greatest golfer ever lived. He still has to qualify to play in the Masters. Do you know what I mean? And most people just want to go out there and play the Masters. And then they wonder why they get their butts kicked. They wonder why they get turned down. So that's why at Rich Dad, we strongly suggest you legally qualify, but also work only with qualified advisors. We'll be right back with the second part of the Rich Dad Radio Show.
Hi, folks. Rich Bontrager for the Rich Dad team. And let me tell you, I couldn't be more thrilled about the landslide win. Donald Trump is back in office, and we've got both the House and the Senate in our corner. That's huge. But let's get real for a second. While the victory is sweet, the challenges we face as a nation are nothing short than monumental. We've just come out of 4 years of economic chaos. Think about it. The dollar has lost value. Inflation runs rampant. Interest rates are through the roof. Our national debt is out of control, and wars rage around the globe. Donald Trump has inherited an economy that's a total mess, and the burden to rebuild it is immense. Now, let's be honest, this isn't going to get fixed overnight. And even as we work to restore order, the cost of rebuilding will be steep. Printing more money to address the issues, ongoing assaults from BRICS nations on the dollar, and even climbing national debts are massive concerns. Here's the deal. Your savings aren't in the clear. They're vulnerable to these uncertainties. And let me tell you, gambling with your wealth right now is not an option. In these last few years that taught us anything, that we need to take action, proactive steps to protect what we've worked so hard to earn. That's why Rich Dad is partnering with Allegiance Gold, a company that we trust to protect your financial future. Gold and silver are timeless ways to hedge against economic chaos. They're not just investments, they're peace of mind for your wealth. Here's the kicker. When you start your investment with Allegiance Gold today, you'll even get free silver as part of their exclusive offer. Just mention Robert sent you, and they'll take great care of you. Folks, now is not the time to sit on the sidelines. Act today. Secure your wealth. Go to protectwithrobert.com or call 844-3-ROBERT. That's 844-376-2378. And let them help you get started today.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. You can listen to the Rich Dad Radio program anytime, anywhere on Android, YouTube, and whatever. As long as we don't get demonetized or taken off for saying criminal words here. But I want you to know our advice is backed up by two professionals, dear friends for not thousands here, but tens of years right now.
You're not that old.
An eternity.
That's another one. Where's another? Yeah, we go back many lifetimes.
And look, you got to play the game with professionals. Don't play with amateurs. You know, we're talking about not paying taxes and making millions of dollars legally. Legally. You know, you can cheat the system, but you'll just go to jail and become somebody's boyfriend. So you don't want to do that.
Or the people that want to pay high taxes and don't question it because, oh, what if the IRS comes after me? Oh my God, the IRS comes after me.
And you can listen to this podcast again at richdadradio.com. And the reason we archive all our podcasts is so you can listen to it again, because this is a very big subject, taxes. And if you pay taxes, you're an idiot. You've done something wrong. If you're an idiot, you'll pay taxes. And the more money you make, because they're going to give you a pay raise, you'll pay more taxes. So that's why our guests today are the Rich Dad Advisors, Tom Wheelwright, author of the book Tax-Free Wealth, and Garrett Sutton, owner of your own corporation. And if you're going to play the game on this side. So, Tom, what do you want to say about taxes and what people can do to minimize them? Because that's what they want to hear. They don't want to hear about anything else.
Yeah.
Remember that the tax law is a series of incentives. You know, it's just a bunch of stimulus packages rolled up into tax incentives. The CARES Act was tax incentives. This last bill had tax incentives. The next one, yeah, all that money that they're doling out, those are tax credits. So you just have to understand that the government does everything that they want to encourage, they do with tax incentives. And so all you have to do is find out what they want you to do, go do it, and you don't pay tax. That, frankly, if you look at Trump and his, you know, he earned what, $400 million on The Apprentice, and then gets a $70 million refund in taxes. Well, why was that? Because he did what the government wanted. He took the money from The Apprentice and put it into real estate.
That means I'm smart.
What he did.
So Tom, what are some of are there new incentives? What are some of the incentives people can take advantage of?
Well, I mean, the biggest incentives right now are still real estate. Okay. And business and real estate are the two big incentives. We already have an extension. For example, if you put in charging stations, you get a tax credit. If you if you put on solar panels, you get tax credits. There's lots of energy tax benefits out there.
I think the biggest benefit of all, what happens if you buy your own personal jet? Is there a tax credit for that?
There can be.
We're only kidding. I'm just trying to make a point here, you guys. I'm just trying to make a point here, you guys. There's a different world out here.
Right.
All of you A students went here. E's and S's. Oh, I got a high-paying job. I'm a doctor, a lawyer, an accountant. And that's the difference. But if you love paying taxes, just stay on this side. Any comments, Garrett?
Yeah, Robert, I agree that all we're talking about are incentives. The government incentivizes people to set up corporations and LLCs. Every state has an LLC law. You'll talk to some people and say, well, I don't think I should use an LLC. That's like hiding assets. No, it's not. It's protecting yourself. Every state allows for it. They don't teach you.
Garrett, aren't there some states that are better than others too?
Yes, there are.
Yes.
Nevada, Wyoming, and Delaware compete to be the best states.
Because they want business owners in their states, right?
No, they collect the fees. So, it's a good source of income for those three states. Yep. But all states offer these incentives to protect yourself because governments know they're not going to teach you this in school, but they know that business people need to be protected when they're taking risk. And so there's nothing improper about it. You just have to know how to use it.
But you also have to know where not to incorporate. I mean, we personally knew early on we were not going to incorporate in California because of all the taxes.
That's right.
Right? Is that right?
Yeah. So my son just started a business. He lives in Oakland, California, and he's like railing against California. I can't believe they tax me just because I'm here. I didn't even make any money and they tax me. I'm going, that is California. They tax wherever they possibly can. They go after people that I think legitimately they have no business taxing, and they'll still tax them. So yeah, there are good states. I mean, there are actually a lot of good states, not just Nevada, Wyoming. I mean, Florida doesn't have a personal income tax. Texas doesn't have an income tax. Arizona has actually good entity laws. Their income tax seems to be going up, but They have good entity laws. So it really does make a difference where you set up that entity.
Yeah.
And you don't have to live where you set up your entity. Correct? That-
You don't. Now
Garrett?
you'll
That-
still
wow.
be, you still may have to, Garrett can talk about registering to do business. You'll still be taxed on your income that you earn in that state.
Correct.
Okay. Unless, for example, it's like, income from interest and dividends that you can actually get out of a state, even though you live in the state. So it's actually possible to, I mean, state taxes is something people don't talk about, but they're becoming more and more important as the states continue to do a money grab for tax revenue.
And then we want to educate people on how to pay taxes, not pay taxes legally, like former President Donald Trump. We'll be right back. Garrett, what do you have to say about the combination of protecting yourself from lawsuits, but as well as from the government?
Well, first of all, you want to protect yourselves from lawsuits. We're a hugely litigious society. But you also want to protect yourself from the government if possible. Now, the IRS has some rules that they can go right through your corporation. You can't really protect yourself in some certain cases from the IRS. But you still, in terms of private litigation, you need a corporation or an LLC, because that, for me, is the biggest risk. You need insurance as the first line of defense, and then you need these entities as a second line of defense, because again, people are suing all the time.
And it's going to get worse. I mean, would you say that's going to happen?
Yeah, it is going to get worse.
So let's say I'm Mr. and Mrs. Joe Average. I have a house and a car, and they have a job, and they have a W-2. Can you help them at all as an attorney?
Well, you're going to have insurance, certainly, and you're going to look at protecting the equity in your house with a homestead. Some states are good, some states are bad. But then if you have a lot of equity in your house, you're going to use an LLC. If you're a W-2 employee, there's not much I can do for you.
And those who are outside, that's this person here, the employee. Go to school and get a job, you'll be safe. What a bad piece of advice that is. And over here, if you're really smart, become a doctor or a lawyer. What happens with doctors and lawyers if they're not smart when it comes to taxes, Tom?
Oh, they get hammered. They just get hammered, and they get hammered more and more. Even Trump's tax bill hammers doctors and lawyers. So there are all sorts of benefits for everybody else, but doctors, lawyers, and accountants got absolutely hammered.
So let me ask you this. So S stands for small business too. So a lot of these guys here, I'm out here every day now. Oh, guess what? I'm going to start my own business. Immediately they're moving here, and they're moving into Garrett's crosshairs, or the people that Garrett's trying to protect you from. Is that correct, Garrett? You start a small business, you're in trouble.
As a W-2 employee, that your employer typically protects you unless you do wanton and willful acts. But as a small business owner, you're going to be sued personally if you're operating in your individual name. You've got at that point to set up a corporation or an LLC for protection.
Yeah. I hear so many people say, "Oh yes, I just started my own business. I'm small yet right now." Tom, what's going to happen to them tax wise?
Well, again, unless they set up that corporation, LLC, they're going to get hammered. The good news is, to your point, Kim, there are incentives there, and the small business can also be at that 20% tax rate. You can do that. You can actually be at 20% while you own your company and 0 when you sell it. So there are lots of incentives for the business owners and the small business as well. It's just that very few small businesses actually understand that or have advisors that understand it.
Right, and the reason we have Tom and Garrett on is we don't make recommendations what to buy, sell, and all this, but all of our advisors have their own books, and we recommend buying, Garrett's books and Tom's books because it's cheaper than hiring them.
And Tom's book is called Tax-Free Wealth. And one of the things in your book, Tom, that I love is you actually have questions that people can ask when they're looking for a good CPA accountant, questions that they should be asking. And Garrett, your book is Start Your Own Corporation and Own Your Own Corporation. Same thing. Great advice.
Because reading these books, you're going to be able to talk to your advisor instead of them charging you to explain everything. You're on second base already because you've read the book, you understand some of the concepts.
Yeah, it's a lot. It's a lot cheaper than hiring them and then asking
And then
stupid
finding
questions.
out.
Right.
Yeah.
Right.
Final words there, Tom.
Well, taxes are going up unless you're smart and you get educated and get the right advisors and get qualified. And then taxes are going down. And I think taxes are going down further and further for those who really understand the incentives that are coming.
Yeah. Another thing too is that this guy says, should I buy real estate to avoid taxes? I said, don't you ever do that. That is the most stupid thing you can do. That's what being qualified means. You don't
like,
ever do things to avoid taxes. You gotta, I've taken real estate courses. I've taken them since I was in the 20s. And that's why I understand real estate well. Kim has managed thousands of properties. She understands real estate. But you don't just buy real estate to avoid taxes.
No.
Is that correct, Tom?
No, you don't buy anything to avoid taxes. I can't tell you how many people will tell me, well, my accountant said I need to buy a Hummer by the end of the year to avoid taxes. I'm going, so do you need the Hummer? No. So basically you're going to give up $100,000 to save $30,000. That makes no sense. Same with real estate. Why would you get into something you don't understand? Why don't you look at the investment first and the tax consequences second?
Hey, Garrett, do you have an entity for personal stupidity?
No, I
That's
don't,
called-
Robert. But
Yeah,
I'm
that's called an estate.
No, but we do have people who just won't listen. I mean, they're insistent that they're never going to be sued. And then when they call me and they go, oh, yeah, I did get sued, then it's too late. So that is personal stupidity.
Yeah, you can't buy car insurance after you've had the wreck.
Right.
And then for all of you guys out there with 401ks, we'll be praying for you tonight. We'll be lighting candles and praying for you, or your stock traders will be praying for you because you're just paying huge taxes unless you're smart. And the third category is gold, silver, and Bitcoin. Thank you, guys.
Thank you.
Thank you.
Thank you, Garrett. Thank you, Tom.
Thanks.
This podcast is a presentation of Rich Dad Media Network.